Hello everyone, Larry Lavrenchich for Ichimoku.co and ForexTrading.tv with a daily analysis of the US dollar Japanese yen for the close of trading Tuesday, December 3rd, 2013. Well, a black body candle and a switch to the sellers in terms of net momentum. The difference between the open and the close is the body on a candle, and it's basically the net amount of effort that either the buyers or the sellers can make in net terms throughout the trading day. So it's the net distance that they've made between the open and the close, and if it's black it means that the sellers have been the stronger party. And what you want to see when a market is trending up are white body candles, and it means that the buyers are continually making net momentum to the upside. Here we have the market still technically trending up, but the sellers have made some net momentum. So it suggests that there is a possibility of a change of trend. Now technically this trend hasn't changed yet, because we actually don't have the opposite configuration of highs and lows here. We have a candle with a higher high but a lower low. So in bar chart terms that's an outside day, and they tend to be candles of indecision because the buyers were strong enough to take out the previous high, but the sellers were also strong enough to take out the previous low. So there's this great volatile battle going on throughout the trading session, and it suggests that the party that was in the ascendancy, that was continually making the higher highs and higher lows here, may be in some trouble, and the strength of the buyers in this case may be in some doubt. The other side of the coin here is that the sellers, even though they were able to project the market down below the previous low, they certainly weren't strong enough to hold the buyers from taking out the previous high. So that's where the indecision comes in. But if we look at where the market is actually closed within the range, we're roughly around the midpoint level, and that suggests that neither side is closed with control. Now that means that there has been a switch of control, and if we look at most of these candles here, the market has been closing up towards the highs, suggesting that the buyers have been closing with control, and now this shift in sentiment where the sellers haven't taken control but the buyers have lost control, and that suggests potential for a change of trend. This is also a potential Japanese candlestick harami reversal pattern. So when we have an uptrend in place, and we have had a very, very strong uptrend in place, we have a white body, we have the black body now, and the body of the current candle is within the body of the previous candle, so it suggests potential for a change of trend. We're looking for a lower high and a lower low. The only problem here for the sellers and changing that trend is that we have close by support at the Tenkan Sen at 102.15, and when we have a market that's been trending up very strongly, and we can see the strength of that trend by the angle of the Tenkan Sen, the Tenkan Sen tends to be the first place that the buyers come back into the market, so the Tenkan Sen will be very important. And as we saw for today's trading, when the market tested to around that area, we saw the buyers coming in quite solidly, and that could happen today as well. So that will really be a benchmark for this market today. If we do see a bearish close down below the 102.15 level, we could see that change of trend. Now we have potential support at the 101.65 level, a previous resistance level, and coinciding roughly with this swing high around 101.50. So if we do break out below the Tenkan Sen, we could see support coming in around there, and that should be quite significant. No major support until the market tests down to the 100.5 level, and that coincides with the area that the Kijun Sen is trading in, so we should see some very, very solid support there, and that should hold up the market if we do trade down through there in the next few days. In terms of Ichimoku, obviously a bullish market in all three time frames. We're trading above the cloud, above the Kijun Sen, the Tenkan Sen, looking very, very overextended, so it wouldn't surprise to see this market come off and find support either at the Tenkan Sen or at the 101.65 level. This Chico span is a long way away from the price action. It's suggesting that this upside momentum is very, very strong, and it is looking a little overextended. And as I've mentioned, if we do see the market come off, look for potential support around 102.15 or at the 101.65 level.